All right, I've got a quick video here. I wanted to get on and talk about Sound AI, Soundhound. They had a major capitulation moment based on a share offering that they've gotten scheduled. They put in the paperwork so that 3 years down the road, they could begin to raise capital by selling more shares. This is basic dilution, which is typically taken as bad news by the marketplace because everything that's out there is set at a specific price. And now they're saying they're going to basically print more shares, making all of the shares worth less. That's very natural. However, you've got to look deeper into the story, as well as the fact that today we're going to look deeper into the technicals. I'm going to let you know what I see. Because, guys, it's not the stock that wins. It's the trade strategy for the stock that can make it successful. You could actually make a massive investment in Apple when it hits $200 a share, and you could buy heavily right then. And then it could fall down all the way to $145 a share, and then you could sell. And even though you've got a winning company and a traditionally winning stock, you could trade it so poorly that you take a winning scenario and turn it into a losing scenario. And I think that could be happening for some people right now on Soundhound, S-O-U-N-A-I. I actually have just now recently gotten into this. Now, if you follow me, about 4 weeks I introduced this stock to everybody and I said, I'm putting it on my watch list. I'm not in it yet. I'm not going to get in it unless there is a pullback, right? And I put out there that 396 was an area that it could pull back to, and then as low as 319, and that I favored the idea of getting in around 319. Now, as it began to pull back with some strong selling momentum, I thought, okay, well, it's getting there, but I'm going to see how low it goes before I get into it. I was asked about it in the moomoo chat, and I said, guys, I'm going to target my first purchase at $3. And then some of you might ask, your first purchase, Josh, why aren't you lump sum buying this? That would be a bad strategy for this type of stock, because when it's pulling back, we have no idea how low it's going to go. And so if I break up my buy orders at a minimum to 4, but maybe 8 or 12 or 20, I could potentially, depending on how long it took to find support and find its lowest price, I could get a better price, a better average price for my investment, right? And so that's exactly the strategy that I employed, and it's the strategy that I've communicated. So what's going on with Sound AI? Why did it capitulate? It capitulated purely because of this share offering. Is it a bad stock? Is it worth investing into? Well, possibly it could be a good stock, because right now we're in the AI craze, and their number one product offering, their reason for existing is these guys are developing AI solutions. And this is a moment in which they have been performing better. Revenues had a huge jump, going up over 58%, and we're 2 weeks out from their next earnings, and they may be sitting on the knowledge that they're going to kill it with these next earnings. And so that's why they could be strategically getting this negative news out in advance, knowing that the stock is going to fly when earnings comes out. Now, I'm not saying that there's manipulation here. You know, there could be, especially on these type of stocks. We also have seen some pretty negative hit pieces. I think there's an effort right now to drive the stock down. It could be that there's a group of people that want to close their shorts at a lower price because they know that there's the potential for this to go much higher in the coming days, because this is AI season and their revenue is increasing. And so I can't really speak to what's happening behind the scenes. All I can tell you is what the charts tell me and my opinion of the fundamentals. My opinion of the fundamentals is that it makes sense because they're doing so well and they could be coming up with a big earnings beat. It makes sense for them to use this as an opportunity to raise new capital. Now you say, Josh, are they raising capital because they're broke and they can't afford to keep the lights on and they're running this company very poorly? No, they've got over $140 million in cash, and so they're not broke. They're potentially getting ready to raise capital in a bullish moment for their company, in which they could then take their company from being worth under $1 billion to being worth $2 billion or $10 billion. So this is them striking while the iron is hot. Now, do I know that for a fact? No, but I think it's a reasonable conclusion to think about in regards to AI stocks in this moment that previously had been beaten down, but are being given a new opportunity to thrive because of how how on fire AI stocks are. And so for me, just to recap, earnings are just a couple weeks away. These guys are not cash strapped at the moment. They've got to file the paperwork so they can be in a position to raise capital at just the right moment. I think that's what they're doing. And so this could be one of the rare cases where share dilution is a bullish signal. I don't know that for a fact. It's just an opinion. What do the charts tell us? Well, I put a lot of weight in what the chart tells us. We've come right up beneath $5 twice, right? And it got up to $5 off of an initial pump. That was a hard wall of rejection, and it sold off. Then it's come all the way back up to $5 again, and it again found it as a place of rejection, and it sold off. Now, let's be clear. That's what's called a double top. That's typically a bearish signal. So if you were looking at the charts, you would have known it's time to get out of sound. I would have gotten out of sound. I was not in it yet, but I would have gotten out because once it got rejected at $5, it became a double top rejection, which was bearish. But even worse than that, if you guys follow me and are truly learning about how to read these candles, if you look at the last candle that sound got when it peaked up to $5, it was a massively bearish candle with a great big wick, clear rejection candle at the very top. It was another signal telling you to get out, get out, get out. This stock is not going higher. And since then, we've been coming back. Now, if you look at things like the Bollinger Bands, you see that we have broken beneath the Bollinger Bands. In a minute, I'm going to give you guys all the resistances and the support and my trade strategy more specifically. But what I want you guys to understand is that we are breaking to an extreme oversold position. Now, we're not as far down as I think we're going to get, but we're going to get there extremely soon. And that's why I wanted to get this video out, because we could get there in after-hour trading today. We could get there in pre-market trading tomorrow, but I think I know where we're going, and that's where I'm going to load up. Now, I've been buying incrementally as we're moving down, but when we get to where I think we're going, and I'm going to tell you guys what that price is in just a moment, I'm going to literally double my entire purchase at that point to bring my overall price average down, and then I'm going to let you guys know where this thing goes up to. This is setting up for a really great learning opportunity of how to swing trade stocks, how to use the charts, how to read the charts, and how to win from the charts. Like I said, just picking the stock does not make you win. You could trade Apple terribly. You could buy it at the top and sell it on the dip. And even though you're in one of the world's best companies, you could trade it so badly that you turn a winning stock into a losing trade. Right now, I can't tell you whether Soundhound is a winning stock or a losing stock, but my goal at the moment is to turn this stock into a winning trade, and I'm going to tell you guys exactly how I'm going to do it. Real quick station break. If you need better trade tools, we are in earnings season, and moomoo has the best earnings calendar out of any retail app. For me, it's super easy to use. I use it every single day to track the earnings that are coming up next. Now, you guys know Google, Microsoft, and Snap are all reporting after market today. And I think you guys know I'm in a big Google play. It's one of the stocks that I've had a conviction on holding through earnings. I don't know whether it's going to turn out well, but I think they're going to come out. They're going to be flexing their AI muscles in this particular earnings, and it could give them a nice pop up. But let me just tell you guys, if we don't get above $127, then really we're just going to produce another double top, and it's going to be a signal to sell Google. So what I want to see happen is I want to see a really strong, decisive move. If they give great earnings and the market loves them and the stock price goes up, it needs to go above 127 for it to be a confirmed hold. So I'm not going to sell it until I see what it does both after hours today and pre-market, and at the opening tomorrow. That will give me a clear picture of what I should do with the trade, whether I should lock in profits or continue to go long on my swing trade. That's it in a nutshell. We need to get above 127 on Google. It's a lot of room to the upside that we've got to move. So hopefully they do a great job. Then we've got Microsoft and we've got Snap. I gave you guys my comments on Snap yesterday. I'm a little bit leery of Snap. I'm not certain whether or not they're going to bring it, but there's a huge potential. If they have a market beat, then yes. And if it gets pushed up above $13, then this thing can go all the way. It could even double if it can break above $13, because $13 has been like a wall of resistance for a long time, and if we get above that $13, it opens up a door all the way up to above $20, and so that would be one. I'm not in Snap, I'm watching Snap, and if it gets above 13 and it has a great earnings, then it tells me that over the next couple weeks we could move all the way to $20, so I will get in then. I don't need to be in now. I want to see what they do to determine whether or not I will load up on Snap. All right, but as I was talking about, if you need better trade tools, check out the moomoo investment app. Check out their earnings calendar. I also host a chat group on the app called Stock Josh Fam. Get your free stock. They're offering up to 16 shares. They're offering a $50 cash bonus. Check out all the details. They're good in the US and Australia, but the offer in Australia is different than the one in the US. So you've got to click on the link in the top pinned comment to look at the details for yourself, and then get your free stock, get your cash, and then you can come find the chat group that I host called Stock Josh Fan. All right, so let's just get into the technicals. Let me look over my notes. So right now, I think that we're absolutely going down to touch $2.34. That is the next support level that this is either going to bounce at or break through. Now, personally, I'm kind of imagining that we're going to break through it, and I see that this thing just wants to come to $2 and possibly as low as $1.95. That's the critical level that I'm going to get excited about owning this. And so even though for everybody else, if it were to get below $2, it would almost be like a building that's on fire, and you'd see all the sellers running out trying to save themselves. I'm going to be running in to take my position if it gets down to $2, because the opportunity after that is we're in a wedge, right? We have a clear line of resistance above us at $5. And here's what I wanted to point out, because I pointed this out to you guys in APLD stock just the other day, that we are making a series of higher lows. And we're doing the exact same thing with soun. Now, the original first low that was established was beneath $1. And then after that, it was around $1.60. And I believe that we could be making a new higher low right around $1.90 to $2. And if we get there, I think we're then potentially going to reverse, go all the way back up and test 500. That's the trade strategy that I'm doing. This is not like get like Josh, as Larry Jones, my friend on his channel, Stock Up with Larry Jones, says, don't get like Larry. This is don't get like Josh. This is the trade I'm entering into. Now, I'm also perhaps not going to go in as heavy as some of you guys might do. Some of you guys might turn around and buy 10,000 shares. I'm small cap stocks, small position size, and I break out those orders over time, and I try to make my largest purchase at the bottom. So this will be a small trade for me, but it could be a highly profitable trade. You guys can follow along. I'm going to try to get into my largest position size at $2, and then it would be just 150% potential gain to get all the way back up to $5. A massive win. This is what I'm doing. You guys can follow me, and we'll see how it all turns out. Well, that's basically the whole strategy in a nutshell. I just want to remind you guys, I'm going to be watching Google this evening, and tomorrow morning I will cover it and let you guys know exactly what I did, what I see is happening in the charts. But then I want to quickly highlight Alibaba. We got a really good news story coming out of China. A friend of mine who lives in Hong Kong texted me in the middle of the night and said, Josh, Baba's going to do well tomorrow morning. Look at this news story. And so Baba is doing well. And you guys know it's a big play of mine. And I've talked with you guys about it because a lot of you are trying to buy the top of the big tech rally, the Magnificent Seven. All of it's way off its lows. Tesla from $101 all the way to $300. I warned you guys not to buy at $299. Somebody did. Somebody bought the last trade at $299. Now, is Tesla going to go higher? I hope so. I'm a long-term Tesla holder. But as far as swing trading or that type of investing goes, I've warned you that these have run up. Alibaba has been run down. Even though it's a great company with, I think, extremely good leadership, they've been beat down and run down by circumstances. It's not that the company itself is failing. They're doing good. I think that this news story is another confirmation that this one that's been beat down has a whole opportunity to the upside ahead of it. It's not run yet. And so if you're looking to get into a play that's not taken off and it's not at its tops, Alibaba, in my view, is one of them. But again, this is not a suggestion for you to buy, sell, or hold. This is simply what I'm doing with my money. All right, guys, that's I wanted it to be a short video, but it turned out to be a little bit longer than I thought it would be. As always, thank you guys for all the likes Hit the subscribe button to get the next video on and to follow along on this trade journey with Sound AI, Google, and you guys know I love Tesla, and I'm also looking for Amazon to be a big win. Hit the subscribe to get the follow-up predictions on those trades. Peace and blessings, my friends. Directly after I post this video, I'm going to go into the moomoo chat to talk with you guys some more over there. Take care. Bye-bye.